Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis here on the Quant chart and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Quant has lost a key area of support at around the $100.3 mark, which is now acting as a resistance for us to continue gearing up. We are also holding above a key area of support at around the $97.3 mark, which is now acting as support for us to continue gearing up. And since today I'm expecting a lot of volatility in the market as a result of the CPI data, which will be coming out at around the 3:30 p.m. Eastern African time, then I'm expecting a lot of volatility in the market. And if the CPI has a positive impact to the market, then there are chances that Quant could give us a bounce back from this key area of support, where we can expect a bounce and get above the $100 mark once more. But in case the CPI comes out being negative, then we can continue expecting further breakdown, where we could see a reset of the low at around the $94.3 mark. That is the other possible scenario that we can expect over here. And if by any chance before the CPI we also lose this key area of support and maybe get a successful retest, then we can continue expecting further breakdown on the Quant chart before we can get another bounce back. To also give you my Elliot wave analysis, since Quant has continued to obey the Elliot wave analysis, here on the Quant chart you can see that after seeing the December lows, we started a 5-wave move to the upside, having the wave 5 giving us a high at around the $229.5 mark, completing the formation of these higher Elliot wave count 1. Then we started a corrective structure in the formation of a larger Elliot wave count 2, where we have been breaking down, obeying this ABC corrective structure, where I've been terming these as the wave A, then a wave B, and I have been expecting one more leg down in the formation of this wave C to the lower side, whose minimum target areas, that is the target area for this wave 2, is highlighted on the charts using this red target area that I came up with by connecting the fibs from the low of the first wave to the high of that wave 1, giving me a minimum target area between the fib level 0.5 and the fib level 0.78, and that is between the $135.2 mark and the $81.8 mark. And what that means is that there are high chances that in case Quant loses its key area of support at around the $97.3 mark, maybe possibly get a successful retest, or maybe we see a straight sell-off to the lower side, then there are high chances that we are going to see one more leg down in the formation of this wave C, fully maximizing our target area. And once that plays out, then we can say that the low for that wave 2 is in, and all we need to do is just wait for a confirmation that the low for that wave 2 is in. And I think once you see such a breakdown move, that would be a perfect entry to get back into Quant, and that is not financial advice. And once the breakdown move plays out, then from that point we can start expecting higher prices, where we can start tracking a 5-wave move to the upside, followed by an ABC corrective structure to confirm to us that the low for that wave 2 is in, and the start of an impulse in this higher Elliot wave count 3 has now started. So that is what I'm expecting here on the Quant chart, and those are my breakdown targets. Also keep your eyes on the CPI data, because that is what is going to give us the volatility, to give us the next direction in this market. And also taking a look at the indicators on the RSI, we are trading at around the 34 mark. On the MACD, we have been able to print a bullish cross, a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.